Welcome back, master students, to week 6-1 for volatility backtesting criteria. And this is going to be our part 2 lecture from last week's. So this is going to be the continuation. And I will say that we have some very interesting topics to talk about here, right? We're going to understand how to measure the volatility versus momentum signature iterations that we measure, right? The samples. Okay, so with that said, let's make sure that we can, if you don't have your computers in front of you, it's okay. You can always observe this recording back later, but it will be advised for you to watch the lecture here alongside your charting software. And yeah, Tahoe Joe, good to see you there, buddy. Okay, so let's go ahead and take a look at a potential back test on this, right? Because I do believe that Zillow, alongside tickers like Carvana and really anything that can benefit from a rate cut, could see further upside. Now, with that said, I wouldn't say that it's upside almost in the immediate short term. I think that we have an opportunity to prepare, right? To prepare for the upside continuation that we may get here. And with that said, I will advise, right? And I will also encourage for you to follow along and try to really understand how these iterations are measured. Okay, so if we're going to use some type of a back test here, I think we were looking at a few different criteria, right? So let's just say one that, oh, you know what? Is, let's see. I forget if Dea was actually in here, right? No, he's not, but it's okay. Let's use the, just as a quick example here. Yeah, actually, you know what? Let me see the 4-day. Oh my goodness. Yeah, okay. Yeah, let's use the 4-day here because that did have some criteria in here. So what I'm going to do here is give you, no, I cannot use that one. Okay, yeah, we're going to use this one instead, a 3-day time frame. All right, so the 3-day time frame, and let me just make sure that it isn't already completely out. It's not. Good. It's definitely not. It's at 89.8%. It's not touching the 90 just yet. The 90% of the expansion level. Please remember that the criteria that we're looking for backtesting is the entry, right? This is how I personally see it. You're going to learn little by little that you can have this on any type of criteria that you like. But following my criteria is what I'm going to teach you here, right? So anytime that volatility's moving average has entered the 15% of critical contraction, right, alongside the histogram, right? The histogram has to also enter that critical contraction zone. Okay, so in this case, you could clearly see that we went inside from both the moving average and the volatility component. Good. Now, the criteria to fire off the signal would be the break of both the volatility component and the moving average, the break of the 15%. The last criteria would be not only the break, but also an upside pivot from both. This is kind of retouching on what we talked about last week. Okay? Just to remind you guys over the criteria here, let's go ahead and continue. So this iteration, if we zoom in very carefully, we're going to notice that we broke volatility 15%, that neon green line, right here. Not here, right? You can see how it notches, right? Because we're on a 3-day time frame. So this is the last 3-day bar. You can see that the moving average is below the 15%. So the signal has not fired yet. Okay? It definitely has not fired just yet. So actually, you know what? I can go ahead, brother. Go ahead. In here. Oh. Mm-hmm. Sideways for a few bars, okay? So what you want to do is if you're getting a contractive signal kind of like this here, if it's like really straight across, then it's not an upside pivot yet. Right. So you want to make sure that you're at least getting some notches like these here. Like you got this one here and then it goes up. Then that would be okay. Right. But yeah, you definitely want them to be pivoting upward. As small as the increment could be, just they definitely have to be. So zoom in as much as you can. So if it's not pivoting up, and if it's in fact just like this here, the signal has not fired yet. It would definitely need the next notch up, and the moving average must meet it. Yeah, above the 15%. Yeah, I was just giving you the example because I didn't have anything above yeah. Yeah, brother. So then it fires, right? So that's a good question here for everyone to kind of listen to. Thank you, my brother. Really appreciate that. So guys, now you know that criteria as well, right? So yeah, definitely wait. It must have the upside bias on both, or the posturing, right? The upside posture on both the volatility component and the moving average as well, right? Beyond the 15%. And that would mark off your signal, right? So let's go ahead and just press Alt or Option on Mac, and that would be for vertical, right? So vertical line would be Alt V or Option V to create that iteration there. In this case, we are not going to worry about what stochastic momentum is doing. The reason why we would worry about stochastic momentum, just imagine this, right? Let's go ahead and just press the playback or the replay function here and kind of put price all the way back here. Okay, so during the moment, we see that we had a massive upside bias here, and we're definitely breaking outside of the 15% from inside, right? So we have the 15% actually down to 5% volatility component, and we are now breaking outside of the 15% with the moving average while the volatility component is pivoted to the upside, correct? This makes the signal fire right at this point here. So that means that at the opening of this 3-day bar, we fired the signal. Okay, so now what you're doing is that you're using stochastic momentum only for the present moment. You're only using it for the direction bias, right? So you're seeing here that this is pivoted towards the upside and we're getting the break of volatility. So that's telling you that, okay, we're hitting the gas here, right? We're throttling harder and we have an upside bias with the stochastic momentum indicator. So now from this moment, you can forget about the stochastic momentum indicator and mark off every single iteration that has historically made that happen. Now, remember the bottom line criteria here is, team, that it should be at or above, right? So in this case, it looks like it's right at the 15%, but we would have to zoom in carefully. Let's zoom in, and see and hear that it's not actually at the 15%. So that means that the criteria is off right here. We have to be robotic and very consistent over the data that we choose here. So that means that we would quite literally have to notch over to the next bar, and this is officially where the signal would fire. So Alt V, creating that vertical line for the next iteration that we have here, right? So now that we have the second iteration, we can go ahead and continue on to the next. In this case here, we have the break of volatility right about here. So let's see if that's let's see if that's at the money or not, right? So we want to go ahead and just zoom into that area there and see if it's at the 15%. And again, it's not at the 15%, right? You can see here very clearly that this is the 15%, right? This is the notch right here. And the moving average is below it. So that naturally means that we have to notch over to this one here and create the iteration right there. Okay? So that now means that we have our third iteration marked. Okay? Good stuff. So let's go ahead and continue on and mark off the next iteration here for us. Oh, sorry. Made a mistake right here. Look at this. I made a mistake. This is pivoted towards the downside. So good thing we looked at it again, right? So that means that we have to correct our positioning, right? And come back maybe around here. So now we have to zoom in one more time, right? Let's go ahead and zoom into this and find out to see if we're actually within an upside pivot at all at this point. Okay, zoom in more. Well, it looks like it is. Great. So we have the firing of the signal back there, right? We already saw where it fired, but it actually fired off the moment we had an upside pivot alongside, on the moving average, alongside the upside pivot on the volatility component. It must be. It always must be. So this is a great example to where it actually had huge contraction. We completely broke outside of the 15% here, but it didn't happen for 3, 6, 9, 12, all the way over here till a month later. Close to a month. And it never invalidated. Why didn't it invalidate? Right? Oh, so that's what you were talking about. Got it. So it didn't invalidate because we never entered the 15% or at. Volatility must enter the 15% or must enter the 90%. Let's correct that. At 15% or below, at 90% or above. That's your invalidation signal. Okay? Now, here is the other criteria that I personally like to follow. Add it to your notes, okay? The criteria to break it, to fire off the signal, yes. Volatility component and moving average pivoted towards the upside and beyond the 15%, okay? The invalidation is not that. The invalidation is just the volatility component at or below the 15% or at or above the 90%. I do not care if the moving average re-enters the critical zones. I care about volatility entering critical. Why? Because if it's going opposing your way, if you're in a bad iteration and this thing enters, for example, the critical zone, then you're looking at further losses if it goes into this critical area because it's going to be gravitationally pulled to the freaking 100%. You do not want to continue. So now that's also something that may not always be true. And remember this, everybody will observe volatility in their own fashion, in their own way. Everyone will always see volatility in their own way. Not one person will observe volatility like another. And it's completely okay. Right? It's completely okay. Now, great. We marked off the iteration here. Good stuff. You know what? I would suggest actually to keep every single one of them green until proven otherwise, right? So just keep them all green and everything will be good, right? So let's go ahead and now mark off the next iteration here. So take a look at this. Volatility inside of the 15%, right? Now, let's see. Speedy is asking, I probably missed it, but why the line on that day if it didn't come down below 15? So here is where it broke out. So we had this massive, massive area of contraction, and we finally broke out of this. But when we broke out of this, the signal fired off right here. But when it fired, we were on a downside pivot. The moving average was upside, but the component was downside. The signal has not fired yet. So we have to wait until we have the fire of the signal with both the volatility and the moving average with an upside bias. And here it is. Finally happened here. So this was in fact the break, but it wasn't the actual firing of the signal. The actual firing of the signal was when they both rhymed. That's yes, I'm happy that we were able to kind of retouch on that, right? Because it is important. Now, Supercats, one more time, right? Here we go. The break of volatility was here, right? That is the sun, baby. Yes, it is. Here, take a bite. Take a bite. Yeah, the sun is hot. Okay. So this is the break of volatility right here, right? We're looking at it right here because in this area here at the money, it was not at the 15%. It was below. So it fires off here. But when it fired off, we had the moving average pivoted upward, but we did not have the volatility component pivoted upward. It was pivoted down. So it was diverging. We had downside pivot, volatility, upside pivot, moving average. Not good. So that means that even though the signal fired here, we still have to wait until they both pivot towards the upside. Here we go. Right here, they both pivoted towards the upside, and this is where the signal officially fired because we never entered, see this low area here, 16%. It never went to 15 or below. So the signal was still fired. As long as volatility and the moving average fire off with the upside bias, If it stays within the 90% and the 15% within it, if it stays within it, the signal is fired for as long as that's going. So do you mark that one as incorrect or just ignore it as an iteration? No way. I will completely mark this one as whatever. But I mean, let's just see it. The price action. Okay. Well, price action dipped. But did it dip? Did it invalidate or did it go up before it? So this is a fire of the signal right here, right? We got to see if we had any upside price action before it touched this critical zone. So the at percentage, oh my goodness. Okay. So it was at the, yeah, the range, it is, guys. This thing deviated heavily before it met its top side. So this makes it a correct iteration, even though it went down. The candle opened here, and this range high, because this is where it invalidated, touching this top side area here of 90%, that's it. Remember, I do not care if the moving average is there or not. Personally, I care that the volatility component touches it. So if it goes 90%, or above, the signal is done. So at this candle here, the range high was at the wick top of this candle, which is $56.05. So that's close enough right there, right? That would be your iteration here with a deviation, right? Okay, so I just used the wrong tool. Sorry. So let me just go ahead and put it at the opening valuation here. Let's use the magnet so it doesn't take forever here. And that's a 7.91% upside move over the span of about 21 bars or equivalent to 90 days. And it deviated hard, but it did the upside. So technically speaking, this was a correct iteration. And this is exactly a sample that can show you how systematic trading can sometimes help remove your personal bias. Because yes, you had a massive downside here, but the stats were always right. Yeah, this is a long time on a 3-day time frame, right? We're talking about 13th of September 2023 to about the 12th of December 2023. Right? So we're talking about almost a 3-month or 2.5 months of just chilling. So if it doesn't touch 90% or more, it's an invalid signal. If it doesn't touch 90%, it's still valid. So if the signal fires, right, breaking above the 15% and volatility maintains within the realm of 90 or 15, it stays as an open signal. It stays as a valid signal and continuing signal. The signal will invalidate only when it touches the 90% or above, or the 15% or below. No, we don't hold through all this because there are going to be several iterations historically. So we're going to get an average. So the average upside, the average duration, and then we use our discretion to risk on or risk off. And that's where executions comes in. And that's where I'm going to take you here in a little bit. We're learning how to measure the iteration. And I'm going to introduce to you guys the executions course by touching on how to execute this play. Yes, lots of discretion, but backed by data. Right? Ian, of course, my brother. Okay. So let's see. Just to the left, Great Man is saying just to the left where it crosses, but with a downside pivot, does that count as an iteration? Just to the left where this here? Or right here? Or this one here? You're talking about this little tiny one or this one here? One or two? Actually, let me just do that. Let me do are you talking about the one or the two? That'll be a lot easier. Two. That's where we thought the signal fired. Let's touch on that one more time. This is all this, guys, this is, believe me when I say, this is where all the questions really pour in. Every track that I've ever had, this is where all the questions pour in. Okay. The signal fired off right here. The reason why it didn't fire off at this point was because the moving average is still below the 15% if you zoom in like crazy, right? Zooming in all the way will show you that here is not the moving average at the 15%. It is in fact at 14.8%. It is an incorrect iteration. So we mark it off over here. And that's where the signal fires, right? Sorry, right there at this line. In fact, let me go ahead and leave this as more of a neon color. And actually more as a, let me see if I can even have it differentiate. Okay, yeah, the neon color we have to do for now. Okay. That's where it fired off. And also, it's already a 4px. Good. Okay. So it fired off here because we're thinking that that's where officially it got the 15%, right? But when you go up here, you're like, oh, damn, it's wrong. It didn't fire off there. Why? Because there's a downside on the volatility component and there's an upside on the moving average. So there's a divergence. So that means that the signal is not ready to expand all the way. That means that it's at its expansion phase, it's already contracting. And the moving average is just reading it because it's delayed. So it creates a divergence. So when this starts declining, the moving average will at some point also decline. And when the volatility component starts to increase, at some point, the moving average will also increase. So zooming in, and zooming in, there it is. Here's the upside bias on the moving average, right? And here's the upside bias on the volatility component. And this was where it broke outside of the 15%. We must be outside of the 15% with an upside posturing on both the moving average and the volatility component. So when I say that, I mean that. We must be outside of 15% with an upside bias or upside posturing on both the volatility and moving average. It does not mean that it's at the breakout side. It could be anywhere else. And you can see here that it didn't happen until way later. But it's outside of it. As long as we broke outside and did not re-enter the critical zone or enter the opposing expansion critical zone, we're good. And the signal officially fires. So we start counting or measuring right from this point here, which is, again, this candle. So let's see. What about if the moving average just touches the line? As long as we're consistent, that meets the criteria. At or 15% or below, at or 90% or above. It must be at or. Right? So if you're touching the 15%, you're good. But you must know that it absolutely is touching the 15% without any give. Right? Because at this point right here, the moving average may be telling you something different, right? So let's go ahead and see if we put it here. Okay, look at this. This is going to be your biggest hint here in case you are confused and you can't really zoom in. Okay, if you have limited visibility, check this out. I want you to observe up here, these numbers, right? Because the moving average is quite literally that teal color, right? Let's hover over this position here and see where the moving average is. Tell me the number if you can see it. Is that 15% where we think the signal fired? Because if it fired there, the component, that's right, baby, no. If it fired there, the component and the moving average would be pivoted up. That means that we would have fired the signal at that point. But it's incorrect. It is at 14.76% and not at 15%. So it is incorrect. We wait until it's postured to the upside beyond the 15%, right? At or beyond the 15%. Make sure to do this, buddy. Make sure to make this arrow face down here where the indicators are. Make sure not to hide the indicators that you have present, right? Because that hides the number. You have to make sure to show it, and then it shows the number. So where you have volume, I have like a Bollinger Bands here, I have our ARC averages in here, reversion variant, all that stuff. Make sure not to hide that, or else you will not get the values up here. And let me know if you do have it or not, brother. Okay, so now that we have these iterations here, let's go ahead and see. Let's go ahead and see. Let's go ahead and see about another iteration. This zone, right? Check it out. Volatility enters the 15%, but the moving average does not. So I will not. We ignore it. It's not an incorrect iteration. It's not incorrect because it didn't meet the criteria to be an iteration in the first place, right? What about this one here? Well, it's not an iteration either because the moving average did not meet inside. Chad, is that you? Is that correctly mapped? Yes. You're talking about the firing of the signal. Let me see. So you're looking at this example here. Are you the start and no. You're ending. You never touched the 90%. The ending of this expansion phase is right here where you entered the 15%. You never touched 90%. Remember, as long as you're within this area here, you're still good. O sea, mientras estés mientras estés entre esas líneas, ¿verdad? El verde y el anaranjado, estás bien. Que se mantenga entre esas dos líneas, ¿verdad? Porque si entras aquí, ya no va a valer. Y si entras en el otro lado, tampoco va a valer. ¿Verdad? So, asegúrate de mantenerte entre el 90% y el 15%. Porque si entra al 90% ya no te sirve. O si entra al 15% ya no te sirve tampoco. Porque es nomás mantener consistencia, ¿verdad? Porque si no la mantienes así, los datos te van a salir bien, o sea, bien mochados. No te van a funcionar muy bien. Es de mantener consistencia y ser bien disciplinados a medirlo a exactamente lo que tiene que ser, ¿verdad? So, entre el 15% y el 90% o nada. Y así estamos, ¿verdad? So, no, ya sabes, y sabes que a veces yo pienso que se nos confunden las palabras también, ¿verdad? Pero ya sabes, mi amigo, si necesitas que te lo diga en español, ya sabes, aquí estoy. A veces me cuatropeo, ¿verdad? Pero está todo bien. All right, guys. So if we can look at Ripe Images. Television. we just went on SAP. Did you guys click the button on me or what? Supercats, I know, brother. I know. You're dude, sometimes I can't even tell that you speak Spanish. I forget. Right? But sometimes I feel like I could low-key explain it a little different if I speak it in Spanish, ¿verdad? But yeah, I love you, buddy. And I hope that did make sense for you. It's just stay within that realm, right? As long as volatility stays within the 15 and the 90, as long as it's within there, then you're good. If the moving average enters, if the volatility component enters that 90, it's done. It doesn't for me, it doesn't matter if the moving average does not enter. But the only place where it matters for me to have the moving average included is if it enters the 15% for the fire of the signal. When does the Spanish mentorship class begin? Oh my goodness, dude. So yeah, and yeah, so the signal fires off here for you, and then it ends right over here. I think you're good, brother. So let's go ahead and take a look at another iteration here before we start. We got to start marking it off, right? This iteration here is wrong. The one that we're observing here. Yes, you would measure the highest point. We're about to get into that right now. So at this point here, also an incorrect iteration. We don't do that one. But let's go ahead and take this one into consideration here, because the firing of this signal would be right over here, and we are pivoted towards the upside. Not here, because you can see the moving average is below 15. So here, we have the signal fire there, and we're good. Okay, now if we are to measure the move, it's actually a red iteration, right? We actually just went to the downside because we touched 90% right up here, and it was done. So it actually never got its upside. So this one would be red, right? What about this one here? We fired this one here, and it invalidated right about here, and we never got an upside there either. So let's go ahead and mark this one here and leave it as red. What about this one right over here? Signal fires here. It invalidates right above here. And it just so happens that okay. So yeah. I think that's a pretty good example there. Right here. This is where the signal invalidates, at this candle here. But you can see that this candle is lower than this one. Your phase is within this range to this range. The highest price during the expansion phase is what you measure. From the opening to the highest valuation. Mark off with the magnetic tool at the opening valuation of the firing of the candle to the range high of the phase, not to the end of the phase. You want to know how high price action went during the phase. So this line could be invalidating all the way over here. But if this was the highest price action you got, this is the highest price action you got. We want to know the absolute highest thrust that the iteration has to offer in order for us to know for a fact that that's as high as price can go to give us the higher probability play, in my opinion. Guardian, sorry, buddy. I think I missed you. Let's see, I want to curse my wife without her knowing what I'm saying. Oh my goodness. Okay, good. I'm happy. I'm happy you're picking it up. And Hydra, brother, I failed you. I sent you a text, or I sent you a reply to the email asking you to text me in case anything like that happens. And I didn't look at your DM again, my brother. I'm going to look at it. I'm going to look at it at the end of this stream, and I will go over what you asked me, right? So, but please use my number, brother. Let's see, Guardian, you got it? Okay. Yeah, baby. It is a princess, honey. Okay. So let's go ahead and, let's see. I think we're okay there. Okay. I think we're okay. I just got to mark this one green now. Don't keep it red. You're a liar. Okay. Let me measure this. This was red. Good. Speedy. See, ARCa, you said you would mark the highest point, but what if the highest point was in the middle of the range? That's fine. Like, yeah, it's what if it's at the beginning and the phase ends over here? Say, for example, your phase ended here and the signal fired here. But the highest point is right there. That's your highest point. There's nothing you can do. Imagine that your highest point was the next candle all the way up here during this entire phase. Then that would be your highest point, the next candle. You have to be robotic. Must be robotic. I'm just thinking of it from a scalping perspective. A lot of times it'll be, I'll be in the 1 month and the volatility band will be above the 90%. And then I'll go into a higher time frame to make sure I have time to enter. Well, Guardian, when in a monthly time frame, you're going to have a lot of time to think about positioning yourself, right? So if you're talking about scalping, I would really look for the volatility breaks within maybe an hourly time frame to a bi-hourly, maybe even up to a 3 and 4 hour, but usually in those early time frames would be better. Now, Queenie baby, are you talking about this one here? Let me come right back in. So if this bar here is red, that's because the break of volatility happened and we never got an upside in the price. So if the signal fired off at the opening of the 3-day candle, $50, and we go all the way across that $50, you can see that price never, and we invalidated here because we entered the 15%. Never did it happen. Oh, on a 1 minute. No. I wouldn't do this on a 1 minute, buddy. I think I would do this on a minimum like 3 minute. 3 minutes to maybe a 5 minute. If you want to get really granular, maybe a 2, dude, but a 1 minute time frame, they oscillate too fast. So let the buy minute cascade into the 3 minute, and let it cascade into the 5 minute, and let it cascade into a potentially a 10 and 15 minute for the higher probability continuation. 3 and 5 are usually pretty good. Okay, so now let's do this. Say, for example, let's go ahead and take a look at this on. Let me get rid of these lines. I'm going to go over with you an executions example. Okay, so I had the reasoning correct. I just had to hear it again. Okay, you're very welcome. Good. Okay, let's go over an example here for executions, which is going to be the following course to this. This area here notoriously looks like a damn bear flag, right? But there's so many things within this that are not speaking bear flag. There are other things that are speaking, in fact, another bearish formation. I can actually see that we may be within a potential ascending channel, right? So we are within an ascending channel and we're approaching the 50%. Okay, so that's pretty cool. I didn't see what you wrote there. So now, if we are approaching that 50%, then there could be some resistance elsewhere. We are within a resistance range here. And it also just happens, it just so happens that we have a triple top. Does it count up here? This is a bearish formation. So yeah, if you're getting that, that's a good point. You're talking about the golden rule of 3 is what I assume. So you have test 1, 2, 3, fake out, didn't actually get that top side test. Your 3 leads to the biggest capitulation event. And then your test leads to the succession of the downside. But you didn't get that. You bounced again. So now we're getting introduced into a potential situation here. There could be something in line here that we're just not, that we're presently not seeing or whatever, you know what I mean? So what I want to show you is that we have some topside targets up there. And also I just want to, damn, is that really, whew? Goodness gracious, that's incredible. All right, good. I completely forgot how I was doing this, right? But I already did the analysis and I'm repeating it to you now. So I'm happy that I'm still, my point is that I'm happy that I'm still seeing the same thing, right? So parallel channel, right? we're looking at a continuation to the upside here. But it just so happens that we're reaching the 50% when we're also approaching, or we just finished, the weekly close. So the weekly close usually goes up to its relevant resistance, whether it's the prior bar or the range high, which is located right here. So if I put a line at the top side of this candle here, look where it resisted from today. Right there. Right? Okay. So we're getting that resistance at near the prior week's high and also that massive wick over there. Good. So there could be pressure towards the downside. Okay. So if it is, actually, I'm even seeing here that, no, we have a 1, 2, and 3 test. Okay, yeah, this was not a test here. This was a test. Reclaim, test 2, test 3, fake out, break down. So test 3 completely broke down. Okay, so now if we have very limited time here, guys, I'm sorry about this. Let's go ahead and just make sure that we can get this done. Okay, so if this is the break, we're talking about a potential downside now. Identify the 50% of your weekly bar, prior week. The 50% just to mark it off wherever it is, we're going to mark it off right about here, which is $45.40, just because that's what happened. The 3-day closed today, right? The 3-day candle that we have is quite tiny, right? So we obviously, we use that. We use that wherever it is, right? So this is going to be the 3-day 50% prior pullback right here. Okay. The 3-day closed as a hanging man and also decreased volume. Okay. So it's leading towards a potential downside. Good. Could it be a bull flag? I don't know. Whatever it is, it's potentially leading towards something, right? Okay. We also got the daily close, and the daily close already has a range here. And it already shows that $89 is at the 50% of the prior bar from the one today. Right? Okay, so this is confluent to the 2-day. And that's also looking like a potential bull flag all on its own. So there may be a shot that price action rejects from this point depending on how bullish sentiment feels. Here is the continuation from a bounce at this zone here. We're looking okay. There's resistance here, right? Nice. We can use it as support there too. Looking like a bull flag. Looks like we may be able to get an upside move. But that's not the answer just yet. We have to see if we could make the weekly pullback, because look what's there on a daily. We didn't see that from a weekly. We're seeing it on a daily. Okay, and the daily also has support here, support here, support here, resistance here, gap right here, right? We have a lot of relevance within this area here, a lot more than we do this zone here. So how do we figure it out? How do we know that price action will pull back that entire range? Can I have any suggestions in the chat right now why we would pull back all the way down to this level here instead of using this and potentially honoring a bull flag breakout? Does anyone have any idea? And it's okay if you don't. I'm trying to stump you. I'm trying to, well, the gap would be a good reason for us not to, but the good reason, yeah, there is a good reason, right, to come back to the gap. But there has to be more than a psychological reason. There has to be another psychological reason. There has to be a statistical one. Gravitational zone. Let's take a look. Well, we're already curving right on the daily time frame. Looks like we could go down. That's correct, Quinny. It would actually be the monthly closures coming in. It is specifically the quarterly. There's a reason why price action will pull back on a quarter. Now, take a look at this support here on a quarterly basis. All that resistance here all this resistance here, all kinds, wick low right here, right? Opening valuation, closing valuation. We have wick high here. All that is rhyming with this zone, which is also the weekly pull. So the quarterly time frame is already pulling from its top side. See, it opened here, 48.91. The quarter went up all the way to 49.98, and it started as it approached to its close, because we still have a few days left, right? Like 3 days, 4 days, whatever that is. As we approach the closing of this bar, like always, we always say this, guys, hold up. I tell you this, if we're looking at an hourly bar, just wait till around we're at around 7 or 8 minutes, maybe 9 minutes. You're going to start seeing the bar decompress. It's going to come back to its mean. So this is already performing that. It's already coming down. So if there's a realm that I would love to catch entry, it would not be where everyone else thinks it's going to be the entry. I'm going to do it where the institutions know the entry is. I want their position. I don't want your position. Retail. We don't think through a retail's mind. Psychologically speaking, introducing a little bit of psychology here, from after executions, we don't use the mentality based from a retail participant's point of view. We don't do that. We gauge the principles from institutional practices. We study the institutional way and the institutional targets. So if we set ourselves within an institutional perspective, then we have reason, and we have an infinitely better target. So in this case, I can already see that my entry level would actually be around this zone here. And now if I use this zone here, I also have a 50% here with that wick, right? Very cool. What if, let's just pull it back somewhere else? Well, take a look at this. Right at the top there. Right at the close here. So it starts to rhyme a lot more and more. Cool. Now we have that weekly time frame confluence with many, many quarter candles at their lows, highs, opens, and closes. That becomes a higher probability zone for entry. Do we have validity for that downside? Let's go granular. 2 hour, hourly. What is the hourly doing? Okay. Massive expansion and critical contraction at a take profit level. Stochastic momentum, nosedive. Okay. Are we meeting the criteria already? We're thinking that we're going to get the pullback down to this level here of 45.50. How do we know that it's even going to reach? I'm sorry that it's reaching a little bit late here, team. I know that we're 2 minutes away here from the ending of the questions and all, but this is important. Hold up. Okay. So we're going to use the average true range on the daily. Average true range states that we have $1.67 of price action. So if we're sitting at about 48.58 and we're looking at about a 45.50, then that's around $3 of average true range. That means that we should have downside being suggested all the way up to maybe the 6 or 8 hour time frame, so that we can complete at least 3 days of downside before we face our entry. We're not ready yet. We're talking about long position criteria here. So let's try to validate. What's the bi-hourly saying? Bi-hourly time frame, critical downside pivot, and expanding like a motherfucker. Okay, now we're moving somewhere. What about the 3 hour? 3 hour time frame, it has a kink. It's already failing it. And look at the 3 hour bar that closed. And guys, this pivot here has not seen this yet. It is a true outside bar, bearish engulfing on a 3 hour time frame. What about the 4 hour? 4 hour time frame, complete expansion here, massive true red bar, and it has not read it, and it's curving. The 4 hour time frame will likely start curving at the open of the next 4 hour bar. 6 hour time frame, let's see how it is. 6 hour time frame, true red outside bar, bearish engulfing. So it looks like our thesis is actually correct. We're getting expansion here, and this pivot has not seen the downside of this bar, and it's at overbought. Okay, 8-hour time frame. So 8-hour time frame is actually showing that this upside that it had is now contracting. The buyers have grown exhausted. So that means that this bull flag, when it could have validated its break on this candle, could not. And it gave it all back. So we're now on a potentially failed bull flag, 12-hour time frame. Okay, we're overbought, but we're contracting. Again, true red outside bar, bearish engulfing. Daily time frame, what is it doing? Daily time frame, expanding with a potential downside starting. It hasn't seen the close of this daily here, so that actually means that there may be upside continuation on the daily time frame. But what does that tell us? We have all of these time frames from the 3, 4, 6, 8, 12 that are going to cascade their downside and bleed onto the daily's upside, which then is going to affect its upside bias. It's going to fail it. So that means that we very much have 3, 4, maybe 5 days, I don't know, of downside on ticker Zillow or Z in order for us to meet our criteria. I am willing to bet that we drop into this zone here of about 45.50 to 44.47. We gauge our entry criteria starting at this point, minimal risk. We enter minimal risk here, seeing that we have catalyst running. If we have a fundamental catalyst running on this, and we have our traded portfolio that's, say, for example, $10,000, and our 100% full port is only allowed $6,000 out of the 10. If this has a fundamental reason why it's going to go up by the time a week passes and we're ready for an upside, let's see the catalyst come in. If it has a catalyst that big, because we already have the rate cuts, that's good. If it has a catalyst that big, and we have the statistics leading for a potential continuation to the upside, and we got the quarter bottom, then that means that I'm going to risk 70% to 80% of my full port allowable trading portfolio on a smaller account. So if we're using a $10,000 account, I'm going to go ahead and potentially use from the $6,000 full port, I'm going to use around 4 Gs. So we enter the market $1,800 at this point. Let it fall. Let it come to you. I will enter risk one more time at this level here, or the 50% one more time. I will enter potentially another $1,000. And I will not enter if it drops anymore with a potential stop loss on shares of 6 to 7% and an 18 to 26% stop on options. I will wait to enter the rest of the entry until we break a major resistance range. Which one would that be? This local high. We get the upside. We get this run on a swing play. We break the daily at 49.15. This validates support, the convergence of resistance into support, conversion. I am buying the strength here. I am buying another $500 here. We break the next range, which is going to be right around this area here. Validate 52.09 as a support. I'm throwing another $500 there as well. And we ride the top. We have to learn how to buy the strength in order for us to get the absolute upside tick. The exit criteria would also follow in a similar fashion. I'm a very aggressive take profit trader, guys, and I enter the entire upside. I will enter many times on the upside, and oftentimes I will exit the fucking top on one shot. And I often call the top. But I don't want you to do that. I want you to secure your profits after your last long entry, because your last long entry is going to be a very questionable area. That's going to be an area where you're thinking, holy crap, this may not have any upside left. I may actually be observing here the very top, but you still have further to go. because your bias is telling you maybe I should get out, maybe I should get out. Stop your inner feelings on that and read the chart. Read the data. What is the statistic? What is the statistical analysis telling you? Do you have further upside? What are your probabilities? Play the play. It's right, gray man. Stick to the process. Stick to the play. If the play is the play, it's there for a reason. You didn't just do all that work for a month and not play the play. So that is a little bit of executions in psychology for you guys. For the coming mentorship, guys, please make sure that if you we're already halfway here, right, through the strategies mentorship. So I want to make sure that I start allocating and have a good reason here to start and continue the master's course into the coming executions mentorship, and following that, the psychology mentorship. So arcmasterscourse@gmail. Make sure, guys, to reach out to me here. Let's get this solidified. Let's make sure to get the seats taken here, and everything will be good. Now, the replay after your chart. Let's go ahead and see. Okay, so entry criteria 4446. Real quick. What is my stop loss parameter on shares? Share it in the chat right now. 6 to 7%. That's right. And what did we say about buying the strength? There's no way I memorized this. We buy the strength because we break the major areas of inflection. We reached the target perfectly, right? We could have played this play all the way through. We would have been okay. But it deviated because we have a standard deviation on the data. But if you're thinking to yourself, damn, should I just play the play and let it go? Well, if the data's suggesting that you would do this, then yeah, play the play and let it go. You break this major inflection here, right? You come back and test it. You're talking about a daily time frame. I'm talking about 4 hour validations upside. Again, here's your break. And you 4 hour, all a whole bunch of them. You got the strength. Let's go. Guys, I told you on a swing play, right? This was a major swing strategy. So I'm not going to lie to you for 1 second, okay? I'm not going to play it here like I'm the all-knowing and all-great freaking trader, wizard, whatever. Not one moment I'm not going to do that. I am going to tell you that when Supercats came out and when Ripe said, can you play the replay after your play? I forgot that I had a replay. I'm going to tell you my honest truth. I forgot that I had the replay. I thought we were at the current price. I thought we were dead ass at the current price. And I was like, oh shit. In my head, I'm like, oh shit. They just called my bluff. Let's go. Let's do it. And if we were playing options, 18 to 26% would have been pretty damn close here as well. I want to train you guys how to be able to do these types of things, guys, because look at this. When you're playing a 15%, let's just say a 13 to 15% shares play, you're balling. You are powerful. If you're playing a 54.50% shares play, You're on another one. Let's all be on another one. Let the questions come in, team. The course is now over. The lecture is now over. Please go ahead and know that there is no homework to this, but I will encourage you to continue backtesting, potentially Z, because this is actually a ticker in real time that we could trade and that we could make a big move out of. And it's resetting up its conditions one more time. Gray Man just said, fuck. That's all I got, bro. Fuck. Mind blown. Love you, buddy. Love you, dude. I usually do that, though. I usually do that. I leave it as a climax, and you're like, damn, dude. Because it really is that. Hey, baby. He's taking a shower. So, yeah, that's what I have been playing. Okay, guys. So, yeah, any questions you may have, team, before we get over to the market prep, go ahead and share them with me right now, and then we will be good to go. But the continuation of strategies, guys, I'm not going to play it nice here, team. It's going to get more difficult. It's going to get more challenging. But that's because I've already been there, and I want to share with you that pain. I want to share with you what I went through. And I want to share with you in a faster rate what was already observed. Right? My goodness. That's right. Supercats, you're going to play it the way you play it, not like me, right? Imagine you, brother. You would have already had trailing stop loss on this. You would have been okay. Everyone will play this different, but you will absolutely observe the same play. But I can tell you this. Two traders, talented, with similar portfolios, exactly to the dime, put them next to each other on the same ticker, the same day, and put them on the same strategy even. Tell them to trade the ABCD strategy on whatever is coming in on the daily of NVIDIA or whatever, using the same amount of their portfolio. One of them will come out with a bigger portfolio at the end. No matter how alike their port is at the beginning, no matter how alike the strategy is, the execution will always matter, not the strategy. The strategy is knowing the play. The execution is executing the play. There is a difference between calling the play and executing the play. Large difference. Love you, Chad. Ripe. Dude, that's going to be a world, bro. We just dove in a little bit of executions in here. Ugh. It flusters me, dude. It flusters me. Even I think everyone, right? I think it'll fluster everyone. But I will say it really is for the best. And I do think that if we study together and if we just observe the probabilities together and grow, then we have a better chance at surviving the markets, right? As long as we're within people who are willing and able to push beyond the normal person's reach, right? Because at that normal person, at that standard person, that reach becomes an extreme amount of pressure. And a lot of people will die out. But if you're willing to stick through it and stick through it with a good group and ones that are always willing to continue their learning journey, then I think you're only bound to be just like your group. You are who you hang out with. And we know this all the time. We've known this, guys. They teach us in grade school to go to the sandbox and be with the other students. Go out and branch out. Say hi to other students. Be with them, right? Make friends. Stick to the trend, guys. Stick to the play, and we'll be good. Ian, I'm not going to let you give up, bro. Even if you told me that you're going to quit, I'm going to be on your ass. And that's what a family does, bro. And that's what a team does. That's what a team member would do for another. Dude, this whole Discord, yeah. It's going to be fire, bro. I'm trying to build them, man. Let's get them there. I definitely hope, man. having traders as good as I'm sorry if I'm not mentioning everyone, right? But I have my I have my graduates in here, like Buzzman, like Jen, guys, like they like Sebastian, they became powerful traders, and I hope that they can become even more powerful than I'll ever be. I hope that. I truly do. So, yeah, guys, if we are done with the questions here, let's go ahead and make sure to get over to the market prep. Let's start looking at a few tickers. Smokescreen's been kind enough here to share with us a few tickers that he has ideas on. I know that it's late for some of you East Coasters there, right? So I appreciate you for sticking through this long lecture here. Supercats looking good there, man. Yep. Right. So let's go ahead and finish off the stream here, and I think we will be good to go. Let's see. I get 3 every few days with ARCa, LOL. Don't worry, we all feel it. Oh my goodness. Any GG? Okay. Ripe. Thank you, brother. And I swear on everything, dude. Every single class. Lunar, I got you, Stock Shake. I got you. I swear on you, dude. I swear on anything. I will, every single lecture that I put together, dude, I want to try to really blow some minds. Even if I have my original master students in here that have gone through all of that crap. Cost is doing it again, huh? Buckets trying to climb today down. Even if I have the original master students, I will always try to push that edge even deeper. Right? Because the original master students, I'm talking about, they went through like anywhere between 14 to 19 weeks with me. And I told them that I would be expanding on the volatility signals, the strategies, right? I'm going to be expanding on them like they never saw before. So I am going to deliver that. We are not done with volatility and momentum. I may have to do one more, but I'm going to try to finish it next week. So Gray Man saying you're just marking the incorrect, not measuring those correct. I am marking the incorrect and the correct. The reason why you want to do that is because you'll have the probability of succession. So if you have an incorrect versus correct, you'll have an average. So you have to have the red ones in there. Because if you have a score of 8 out of 10, you have an 80% probability. But if you have a 4 out of 10, that's a 40% probability. You probably don't want to long that. So make sure to include your incorrect iterations as well. Just as important. Actually, it is not even to say just as important. It's actually to say that it's empty without it. You must have both. Or else. Or else incorrect data and money loss. And we don't like that. We don't like to lose money ever. Oh yeah, right. You're saying I'm used to learning things pretty quickly, but I've for sure decided to give myself way more time on trying to be able to apply all of this consistently so I'm not too hard on myself as I was before. Ripe, dude, you know what? I don't want to add to this like I'm going to fucking tell you like dude, I consider myself not the smartest person in the world, but I do consider myself bright enough to fucking learn some shit pretty fucking fast. I have a high IQ and I think I'm fucking capable. So I'm going to tell you this. I started learning and I became consistently break even by 6 months. And at 6 months, I thought I didn't pay attention to anyone else. I didn't know about the other trading mentors or trading anything. I just had my one mentor, and he's been trading the market for almost 25 to 30 years. Short bias. but he's very discretionary and he's not about the trends, right? About like people, like on, he likes zero hedge. He likes, unusual whales, things like that. Yeah. But as far as like the traders' interviews and stuff like that, he's nothing about that, right? So he never told me the time expectation. At 6 months, when I became consistently break even, I was having the hardest time gathering any cash to make ends meet at my house, and also with a sick son, right? I could not for the life of me survive. I literally had to prevent myself from eating certain things so that I can be able to have my daughter and my son eat, right? I would make sure that they were okay. Like, who gives a fuck about me? I'll go days without eating if it means that. I don't care. So I got desperate, and I felt that at 6 months, I was like, no way, it's taking this long. I was like, I feel like I said, guys, I'm sorry. I don't mean any offense by this, but I have to tell it to you like I said it. I said to myself that I felt like I was retarded. I was like, oh my goodness, like I can't believe that I'm not getting it. Like I'm struggling at 6 months. And then somebody told me, dude, you should start looking at these trading interviews from other traders who have gone through similar stories and stuff, right? I'm sorry, Chad. That's why I said that I apologize if I offended anyone. No, you're not. Don't fucking say that to me ever again. Dude, are you kidding me? Dude, you're such a fucking bright person. You're nailing it. And I apologize again, right? I'm just telling you how the story went for me. Ian, I hear you, buddy. I hear you. So I felt like I was just at a cap, but like I didn't know what to do. Thank you, buddy. I love you, dude. You definitely got me on that one. So yes, Guardian, 7 months in. Oh my goodness, man. So I started looking at the interviews of other traders, and they started expressing a common knowledge within a common knowledge that I didn't even know of. They said to become consistently break even at an average rate is 3 years. Yeah, the humble trader, be the trader. My goodness, there's a bunch of them out there, right? So I started noticing that the common knowledge was to become consistently break even at 3 years. And as I started to put threads of analyses up using the ARCa Bull's name with literally no followers on Twitter back then, people started to surround me. And they started asking questions. And they would say, don't you know that this is about to this or this is about to that? And I would say, I don't know, but I think price action is going here because I have like a mathematical thesis, and that's saying that the probabilities are set to go there. I didn't know what the trade was at all before August 21st, 2021, August 16th, 2021. I did not know anything about it. So because people asked me those questions, I realized that, holy crap, there's a bigger world here. So I started learning more and more and more. And also with the pressure of having like a dying son there and no food and shit, losing your house and losing 2 jobs, everything that you ever had, damn, the fire is under your ass. So I didn't care about myself. I didn't care about anything unless my kids ate. That's all I cared about. That's all I cared about. Right? So I did that. And I continued and I continued and I continued. And then I realized that more and more this oftentimes this repeating term came to me in direct messages. ARCa, you're like a prodigy. ARCa, you're like a prodigy. ARCa, you have a talent. ARCa, you have a gift. Use it. Like ARCa, you this, ARCa, you that. And I didn't even know it. So I will say, Ripe, that you're already calling out things that are super obvious on the chart that a lot of people don't even know to do in their first 2 years. I don't know how long you've been trading, dude, but I gotta tell you, apparently it takes a lot of time. And I know that you're bright because I hear you. So If you're not break even at 3 years, that doesn't mean you're not made for the trade. It just means that you're a patient learner. It does not mean that you do not belong in the trade. It means that you're probably going to be better than every other trader that came before you and made it before you, because you're learning in that rate instead of in the faster one. It means that you're probably going to surpass your mentor. And I hope to God that's what happens. And you never look back to ARCa and say, what do you think Price will do here? I hope to God you never come back to me again. But I hope you do, because I have made dear friends here. But if I'm going to teach something, I'm going to teach it well. And with absolute intentions for you to really break out and never have to deal with an alert, never have to deal with somebody to tell you that this is a higher probability move. I want you to feel so secure about your price action callouts that you will take no one's consideration unless they're absolutely proven live. And it's either going to be your own or someone magical. That's what I want. I don't give a shit about my subscription. I don't give a shit if you stop the subscription or never pay me anything again. That's not my goal. My goal is for you to leave and fly. Your family is my goal here. Your family's wealth is my goal. So we'll pay the price. We'll continue being as badass as we can, but our families will reap the benefits. And that's what I want from every single one of you. Guardian saying, I will fly, but also will stay. I love you, buddy. It reminds me of Sebastian, really. He's a very talented trader. He doesn't have to be anywhere near me, man. You know, it reminds me of Buzzman. He doesn't have to be anywhere near me. Smokescreen doesn't have to be anywhere near me either. Oh, my brother is saying, Sebastian's saying, I'll be here forever, my brother. I love you, dude. I love you so much, man. Happy Torito saying, why leave? This is family now. I mean, dude. And you really, it's like, it really does grow, you know, I grow, guys, you know, from the other master's courses, like I had people emotional that they finished, you know. Smoke, I love you, buddy. People got emotional when they felt that was the last one. And then so many more emails would come in like, dude, teach it again. Please teach it again. Continue with us. Like expand, segment, do it, like give us more. And that became a little overwhelming, right? So it took away a little bit from my trading. And now I'm over here practicing my futures, right? You heard me tell options. I was like, dude, I'm not opening the account yet. Let me practice my futures. I'm practicing my discretion again, right? I trade it with you guys daily, but it's a different thing to trade it without actually speaking it out loud anymore. Without guiding it, that's a whole other psychology that I haven't been in a long time. Like I almost have to teach it to trade or else I'm not going to be successful at it. So I have to relearn how to trade without speaking it or how to trade with just a group of dudes. Clemente saying, ARCa, I listen to your videos at 4 a.m. every morning while driving to work. Really? Dude, that makes me feel so bad because sometimes I don't release a video. Damn it. Bro, it's like, damn it, I didn't deliver to Clemente now. Fuck. I will be sure to release, man. I'm so sorry. That is really cool, though, man. I will say thank you. Accumulating J saying, once you learn it, you see the promised land truthfully. Oh, dude. Oh, yeah, man. Yeah. You really do. It's cool. You're fired. That was my dad. Oh, my goodness. What did you bring in here? A little Legos? Okay. But I love you guys so much, team. I said to the ARCa Bulls Discord that I may show up at 7:30 or 8, depending on how many questions come in, right? Because I knew that this lecture would bring on a lot of them, right? It would it would bring a fair bit of questions into this one because of, you know, because of the obvious, right? We're practicing here executions. You're literally seeing the execution play out with, and also trying to call my bluff. I hate you guys and I love you guys. I'm also low key very, very happy that it was one of the good to goes ones. Right? Ian, my brother. I just don't want to let anyone down, especially ARCa. Dude, you've never let me down. You've never, ever even been close to letting me down, dude. Never. Oh my God, dude. Smoke saying you are never a bad trader. You just have bad days, dude. And you do. And then, dude, see, that's the thing, is that bad days can be weeks and can be months and can be drawdown years. Lance Brightstein, he was one of my favorite traders. He's had red years. You know what I mean? When is spring break? I need time to process. Need a teacher work day? When the holidays, some holidays come in, actually I will have to, I'm going to be going to Mexico for a wedding. So that week, yeah, I'm going to, I don't know. there may be just 1 week. One lecture off. Buzzman, you struggle with revenge trading, dude. Dude, everyone. Okay. Quinny and I just had a conversation over that today. Yeah, we should all do a gathering. Of course we should. If it's starting to click, man, that's a big deal. Gray man, I love it. I really love it. And yeah, Guardian, I have to say, man, this is going to be a real test of resilience. You can hear that little guy in the background, guys. Like, trust me when I say that trading and doing this damn thing while this guy's screaming on my back and climbing on me and then waking up at every freaking 3 seconds is not the easiest trading career in the world. It's fucking challenging, but I gotta do what I gotta do. The ARCa Bulls cookout. Gray man is saying this is the first class I've had toddler free. Oh, dude. That's pretty awesome. That's pretty awesome. Like, I actually felt the silence around you because it's so like scarce. That shit costs money. Silence. I will sell you silence. The hardest part for me is to overcome. The hardest part for me to overcome was the psychology. Oh, dude. Yeah, man. Because people tell you, oh, go. Turn on the light. Hurry. I'm coming. It takes, they say remove emotions, right? Here's, more from the psychology's mentorship, but I have said this, but they say remove emotions. I don't abide by that, honestly speaking. And I don't abide by that because if you really, really analyze the way that's possible, is that it takes an emotion to remove an emotion. We're not built that way. So I'm curious to see how the timing comes into the play. We're getting there. Oh, man, we're getting there. We're just shy of it, actually. I think next week will be the one. And I got to say, timing is the hardest thing to do. Timing is very much one of the most difficult things to do. Guys, I'm still early today. Like, I've gotten to the point where I don't want to miss it. Right? Oh, that reminds me, Guardian, send me the freaking email. I still owe you a book. Bro. Yes, it's in my store, but it's in German. The Best Loser Wins from Tom Hugard was one of the best books. I got to say, guys, you got to learn how to be the best loser you can. Hold on, guys. Hold on. This guy just, hold on. My little guy. I'm coming, buddy. I'm coming. Oh, my goodness. Sorry, guys. I am back. Okay. So, yeah, that was I shouldn't have let him go to pee by himself. He literally peed the whole thing. Oh, God. He just let it out everywhere. It was a mural of urine. And he looks at me, he's like, done. And I'm like, oh, done, huh? Cool. Thanks, bro. Kick your ass, fool. Yeah, beauty was everywhere, man. He let it out. He let it out. He said, man, this guy's not peeing with me right now. I'm about to let him know. I'm about to let him know how beautiful his little gesture is towards me. I'm going to paint your gesture towards my peeing alone here on the mural of this wall here. On the wall. It's going to be a mural on the wall. Here you go, buddy. You like it, Dad? Oh, I need snow. Oh, my goodness, man. I have peed your pants. Oh, dude. Then he can learn to spell his name like Big Daddy. Dude, I love that movie, man. It's been a long time since I've seen Big Daddy, Adam Sandler. There it is. He was peeing his name on the wall. What do you want him to pee your name on the wall? Get out of here. I forgot what he said. No, dude. That's literally how my boy looks right now, bro. He dead ass looks just like him. And I think he's probably about 5. I think that boy is probably 5 years old there. I think he's just about a year older than my boy at that point. But, but dude, dead ass. That's what I deal with every day, right there. That the size of that little boy right there. That's my little guy right there, just a year younger. Oh my goodness. It is a hoot and a large holler. All right, guys, so I'm going to go ahead and stop the recording here because we've been recording the entire personals. Then we're going to be all good. Oh, my God, look at Adam Sandler. He was so skinny.